Hey guys, today we are going again specific and objective to one company which is literally driving the markets to all-time highs and high valuations. That is Nvidia. We are looking at some of the signals from leaderships in terms of insider trading and what their actions signify for the long-term view of the market. Hopefully it will be insightful. Enjoy. Hey guys, another Wednesday, another recording of Bullish Banter episode. I think in the last couple of days, fundamentally speaking, very little has happened in the markets. Other than that, how are you doing, Rufus?
I'm doing fine.
Yes.
It's just the worry and the anticipation of Nvidia earnings today. Yeah, it could be the make or break.
Okay. I know by the time this comes out, like every time we do it, little to no consequence definitely occurs. Not little to no consequence, but the obvious occurs and the price action is wild. I told you earlier, I do not agree with the sentiment that it is a make or break.
Well, there's $200 million worth of options at stake.
Well,
which means it could potentially drive prices up or down by an estimated 10%.
So it's the most, let's say, heavily traded stock at the moment.
Yes.
You know what? I don't think it will crash the stock market. I think people have been looking or hoping for, I think people got that hype or high of, 2019. They drop suddenly until it reaches a point where like, okay, we are going to basically 208 level or 99 level or 1929. So people, I think analysis nowadays is like, how can I relate it with the previous fall in the market and not really devaluation of actually proper wealth of people and obviously let's say having a credit crisis, something like that. I think when we have something like that, then I would be worried. But if the way things at least we have been looking at, for me, that is a good volatility for me this week.
Well, for a company making an estimated $20 billion worth of sales revenue per quarter. I don't think it makes sense for the same stock to be trading at 91.7 multiple price to earnings ratio.
Do you think they'll split at some point?
Well, that's in the books. They already did it in 2021. The key concern for a split, I don't think it affects the valuation of the company. Only changes how much share each, how much value each share is. But the overall valuation is the same.
Okay.
So for me, it's about the concerns we are seeing across board.
Okay.
When we say clouds are gathering, it means that there is information from the east, information from the west, all coinciding in one place to bring about a big storm. And that has been the key concern in the market today. And for our listeners, today is the 21st of February, and we are looking to talk about the current trends in the US stock market with a key focus on major players. Mostly, we'll be talking about the billionaires and their stock trading activity, insiders on these major companies, especially the Magnificent Seven. Of course, we also try to touch out on some trading activity from Congress.
It's more or less like a signal podcast, but not the typical signal of sell gold, buy gold, but definitely indicators of future price action and movements. Today is like we are covering signals that players in the markets typically look at to make a long-term or short-term decision, at least in whatever asset class you invest in. And I think it's only fair we do this. I think it has been almost a week now, whereby Jeff Bezos on their filings with the SEC, Securities and Exchange Commission in the United States, has been doing almost in a bulk of almost, is it $2 billion worth
2.4.
Worth of shares day by day. And right now it stands at around 8-point-something billion. And typically, if you look at what is it Elon Musk did sometime last year, almost another 2 billion or something shares, definitely played a role in the depreciation of the price. of Tesla, at least since December up to date. Even now, it's trading, I think, it's below $200.
Yeah.
Do you typically look at this, especially from the CEO themselves, as a sign of maybe future poor performance, or it is just them maybe given some of them do not earn salary technically,
Yeah.
so maybe they just want to buy a new yacht?
Well, the way I think about it,
Yeah.
a CEO is technically an insider. It's someone who has information about the company, knows about the technicals of the company and other key metrics that are not public. So if they decide to sell, especially when let's say the stock is weak and not doing well, it's usually a negative thing. It's basically shoots down confidence into the stock.
Yeah, I mean, why would you sell it?
Yeah.
Especially, well, let's say I want to compare it with what Nvidia is doing right now.
Yeah.
We have not heard anything about Jensen Huang selling shares while it has hit all-time record highs.
Yes.
But Amazon is trading at pretty much peak price, not bad, but not so good.
Yeah.
And then they are off. And you have, I think I've seen reports whereby they are trying to either modify their warehouses and all these reports coming about.
Yeah.
So definitely.
So for me, the key point I'm trying to bring about is that if an insider is especially one of the biggest stockholders in a company and is an insider, if they are selling and the stock is really weak and you don't have a big bull market, that's usually a big negative. But then if the stock valuation has really gone up, let's say, for instance, Amazon made some good returns over the last year. So it basically recovered from the 2022 sell-off. So in 2023, we saw a good rally, and now everyone is enjoying some good profits who held their positions. So when you see this kind of selling, it's a little bit different from the first one that I just addressed. So in this case, it's more like profit taking or marking the top. So when I see Jeff Bezos selling $8.4 billion worth of Amazon stock within a period of 3 months, I assume that in his projections, he has seen that the valuation has gone way overboard, and to him, he thinks that it's the right time to cash out, and maybe after some form of pullback or correction, maybe he'll be back in. We don't know about that. So the key concern in the markets today is that it's not just Jeff Bezos who is selling his shares. There are other companies that are also selling their shares at this top. So after enjoying some very good 2023, with the AI boom, there was a lot of investments in tech. We have seen Mark Zuckerberg selling a record number of shares.
Yeah, in Facebook as well.
Yeah, that was almost $500 million. So it's 400 and something. It hasn't hit $500 million yet. And when you see these top CEOs selling their stocks, then it brings out the memories of something we saw at the end of 2021. So at the end of the 2021, this is when we had the S&P 500, the Nasdaq, Dow Jones, all of them hitting all-time highs. But then after these CEOs sold their stocks during those highs, the following months or the entire year of 2022 was basically bearish for the entire stock market. And this was a big correction as investors were responding to the change of monetary policy from the Federal Reserve Bank of the US. So right now, we don't know what fundamental change will be happening in the near future, but we are already seeing signs of various CEOs selling their own stock.
Interesting that you mentioned stock declining. I think 2024, we have seen almost 4 times market close at all-time highs.
Yes.
If I'm not mistaken.
Yeah.
All-time highs. And every time, I think we have always been looking at, there is no driving factor per se, given there is a lot of, scaling down of employment. But then if you look at it fundamentally from the company's perspective, lower payroll, a declining payroll number is good for them because it limits their liabilities, while also allowing maybe for cash for either research and development, maybe expansion, maybe product development, or even marketing, something like that. Is it that the stock market is so much, how do I put it? in a way that people are either, positively deluded, or they are objectively viewing the market as not near the turning point for a reversal.
Well, when you talk about a reversal, it's something that I tend to see as very tricky to catch. A lot of investors have burnt money trying to catch a top in various markets. I remember there was a funny story of a Brazilian billionaire losing over $1 billion betting against the stock market. So whenever you see prices really going up, they tend to create a positive feedback loop. And we have seen it happen with land in Kenya. So over time, we have seen investors who allocated some of their money by purchasing parcels of land in Kenya come back to sell the same land multiple of valuations higher. So that created a positive feedback loop where everyone now thinks that anytime I buy land, after a couple of months or years, I will be able to sell at a much higher price. But then bull markets don't last forever, as we all know in the stock markets. So in this case, when you see the Nasdaq making a big rally in 2023 and now extending this rally in 2024, then people stop focusing on the fundamentals of the company, and the price of those shares becomes more of a speculative asset. So we have seen it happen with Nvidia. For instance, year to date, the stock is up 44.19%. And this is crazy. In previous years, a lot of investors had projections for various stocks, and they would try to achieve something within the limits of the S&P 500 performance, which averages about 13 to 15% in a year. So when you see a stock being up 44.19%, we haven't seen the earnings for the last quarter of last year, which is what we're expecting later in the day today. Then it means that the market is really speculative. Yeah. Just to put it in perspective, the company has literally gained over $600 billion since the beginning of the year. That's almost the equivalent of the entire net worth of Tesla. So Nvidia as a company, its valuation has increased by an amount that is equivalent to the entire net worth of Tesla. So that's when you start realizing that this market is no longer looking at fundamentals. If the entire sales revenue, not even profit, the sales revenue is just 20 billion, and the volume of or the market capitalization has increased by that amount, then it basically means that we are pricing in what? Somewhere close to 17 years of earnings over the next what? That would be 2 decades.
Yeah.
So we are pricing in the profits of this company over the next 2 decades. It doesn't make sense.
Yeah, that's why I said, is it deluded optimism or objective rationalization that you cannot, given they are not a monopoly?
Yeah.
There have been allegations.
Well,
there have been allegations of books which are not cooked and everything. But then again, their customers or clients are not per se complaining.
Yeah.
But then there is the other story of some of them are maybe shell companies operating under them.
There's this issue of saying a company is a monopoly. I believe to some extent Nvidia is a monopoly.
Really?
Because it has the top chip in the market right now.
Yeah.
No other chip is faster than the N200.
Okay. Yeah. No problem with that. Yeah. But then again, those are required for maybe specific oriented functions and machines, right?
Yeah.
But in the general sense used, the commonly, market demand tools, TSMC is good in terms of scale.
Yes.
I think Nvidia is also good. There is this other one, AMD, SMIC. Yeah. They are okay. They can be able to definitely meet the demands of the market for general use, and their margins in terms of cost are not also that expensive.
Yeah.
So in that spec of specialized tools, Nvidia definitely is a monopoly there.
Yeah.
But then again, in terms of general mass use or consumption, I think that would be my case or my my view own a monopoly because they do not serve just one niche of people who can afford it. They serve a niche of everyone. Literally everyone uses a phone. They have used something not only from Nvidia but also from TSMC.
Yeah, I agree. What I'm seeing here is Nvidia having the top chip. And when investors are betting on Nvidia, they are not betting on the number of microchips that Nvidia is selling. They're betting on dominance of Nvidia, where anyone who is developing an AI product and they want to be top level, their best bet is by purchasing Nvidia microchips.
In summary, going for the fattest toad.
Yes.
Frying it. Yes. So I know today, everyone, literally, I think this week and for the next coming days, everyone will be digging down on the Nvidia earnings. Being 21st, the earnings will come about maybe tomorrow morning around 1 a.m. On Thursday.
It's today after market close.
Yeah, technically that will be tomorrow. It's thereabout. Right?
Well, if you are up past midnight, you'll have them.
Yeah. Do you think, given I think the dollar has been strong, if you have been looking at the technicals for traders, either gold or dollar index or any euro major pairs, every time we have had FOMC, CPI, and of course NFP, we have had a very strong bullish run for the dollar.
Yeah.
Do we think that Nvidia has that impact on the markets today, whereby the stocks will do, let's say, something like Nasdaq will do maybe a, 4% drop or 5% appreciation? And will that last not just for today due to volatility, but for the entire month of February?
Well, I think it has a significant impact. Considering the past performance over the last 1 year, we have seen the Magnificent Seven. These are the top 7 companies in the AI industry that drove the biggest gains on the Nasdaq and the S&P 500.
Okay.
While the rest of the market was majorly moving sideways with some slight gains. So when we are focusing on allocating capital to stocks this year, you want to know whether this AI boom will be extended, whether it will be overblown, and whether there will be a market correction. So Nvidia, being a key player on the Magnificent Seven, it's bound to report earnings today. People want to know, is the books aligning with the price action? So if the company happens to meet Wall Street's expectations, then there's a likelihood that investors will be betting that this demand is real and there's a potential for further growth in this stock.
Okay.
But then, if it happens to miss earnings expectations, or even drop their projections for the next quarter, or maybe for full year projections, then that could be a major signal that we are approaching the top of the bull market and it's time for a correction. And by a correction, I basically mean a drop in price by 10% from the most recent high, rather than what other people are saying out there that, the stock market could collapse, or there could be a credit crisis and so on.
Yeah.
So yes, we understand there's those risks, especially in the real estate sector, and those risks are majorly associated with banks. But then for the tech sector, it's all about the bets versus the projections for the next quarter, next 2 quarters, or even the next 1 year.
Definitely. This year we are doing something very interesting for listeners who have been with us for a year. You'll notice we try to focus on one particular aspect and try to dig in as much as possible onto it. And for Nvidia, I remember, I think if not sometime earlier on in the year, last year, I mentioned that there is usually maybe 1 or 2 factors moving the markets, especially for those who trade in the equity indices throughout the time. Last year, we had 2 or 3 factors. Of course, there was still the uncertainty of the oil prices, which really played a part in the energy stock market. And then there was a time, you remember, when there was a lithium shortages or lithium production, which really affected the prices of Tesla, BYD, and any company which is involved with electric cars manufacturing. And this year, as much as the Fed really has put, I cannot forget to say this, bond yields. They really played a part for around June last year to around October. They were really the talk of the town and really dictated how much the stocks could go up.
Yeah.
This year, is it the year that maybe after 3 years, because we have been looking at since COVID-19, most of the companies which we call them COVID stocks have literally corrected now to equilibrium. And now every investor would want to look at it objectively as an independent company and not really an opportunistic to the circumstances of the time. To the point, will we see this year the commercialization of AI? Because if you look at Amazon, if you look at Microsoft, they beat earnings. But investors were not such upbeat, and because the AI side was not really giving out, confidence that it is, given the billions invested, it will bring money. We have just seen recently Sam Altman, the CEO of OpenAI, going to raise, I think, was it 8 billion?
I think 7 trillion.
7 trillion. Crazy amount. I don't know even how many numbers that is, but that is very interesting. They are trying to, build. They have built something in the sense of it's Sora or Sarah, whereby you can create text to video.
Yes.
These things definitely, I think the charges for ChatGPT, they are trying to now sort of calibrate it to be equal with all the other, chatbots and everything. Are we likely to see now real value in it, meaning that investors, or rather regular consumer, can actually pay for that? So that we can say, okay, if they actually get a commercial aspect, I know Nvidia just makes chips. Then definitely, if people see, especially those who make it, interact with consumers directly, Salesforce, maybe Amazon, maybe Google itself, because I heard they want to make Gemini part of Google. I actually joked about it recently. If you can type something on ChatGPT, and then it gives you a whole list, then you can just do it on Google, and then after they have named it from Bard to Gemini, maybe they'll just go back and name it Google.
Most probably.
Because they have come back to the G. Point is, Nvidia will be selling chips. So definitely, if there is a commercial revenue aspect from these companies, perhaps it can go back to Nvidia. Are we likely to still monitor Nvidia for the next, 6 months, or after today and things don't go well, we might start to look for something else?
Well, the way I think about it, if you go back to the 2000s, when websites were the key thing, they were like the most revolutionary thing in marketing. Having a website, having a mailing list. So email and website marketing were really big. So everyone wanted to experiment with different sites, different applications.
And they charge exorbitantly.
And all they kept doing was buy cloud computing, hosting services, as well as domains. So for a company that was selling domains, hosting services, applications for websites, they really made some good amount of money. And I think it's a similar bet with what we are seeing with Nvidia. So a lot of companies are competing with each other to establish their dominance in certain aspects of AI. So nobody is building AI just for everything. They have a specific niche where they want to take control. So you might be building a chatbot, another one is building let's say, code generator, another one is building onto video, photo editing, and so on. So as all these companies compete to build these products, the number one key thing that they will need when they sit on their boardrooms is first, they will need a very fast processing chip, and the best, most available, I don't think it's the most available, but it's the best performing chip, comes from Nvidia. So this creates insane demand for Nvidia chips. So right now, investors are not worried about the demand for Nvidia chips. They are worried about the ability of Nvidia to meet this demand, and maybe not having face challenges with let's say, their production lines, their suppliers, and so on.
Okay.
So if Nvidia can be able to expand its production capacity linearly and meet this excessive demand, then it would make the suggested profits from the valuations we are seeing. So a lot of investors are questioning Nvidia's ability to meet this demand and make this money, because it will not make money until it delivers these products.
Interesting. So Nvidia is basically shovel sellers in a gold rush.
Definitely.
You mentioned something very interesting about .com era, 99, 2000, and everything. I think what Google did and hacked it all, it's combined everything else you are doing and made it one-stop shop. You want to Google my address, do this. You want to read a book, find where you can find a book, just Google. You want to know what is the definition of money, Google. I think if we have something that maybe right now, I think they have a limited data information up to around 2021, most of them. If maybe based on how they have been working on it, they improve and even on the free version, it adds value to you. That can be good. I think right now they are benefiting from the fact that Google has so many advertisements, and therefore there is that inconvenience in terms of research and reading. So maybe decommercialization of the advertisement can play a really big role on that. Now, on the other aspects of chips and everything, there is the real competition from something like Intel. I think if I watched the CEO of Intel on Davos say that they are in the process of developing a chip that should be, I don't know how many nanometers, quite small compared to what Nvidia has today, but they have pushed back production to something in the lines of 2025, 2026, thereabout. Same thing we are seeing, I think TSMC is building a fabrication, basically where they manufacture the chips, for those who are not familiar, I think it is in mainland USA. Of course, Microsoft is working to delink their dependency on Nvidia. And obviously, Altman is getting 8 trillion.
I don't think he's getting that amount of money.
Definitely. If we did that, if anybody is willing to give you 8 trillion, definitely you can pay some debts for some people. Do you think this is a real risk for those who are investors in Nvidia stock to, let's say, consider and maybe reconsider their portfolio, whether be it to cash out profit and then buy in on the recorrection, or these are just, market charters that at some point they'll die off?
Well, the real risk I would be concerned about would be, one, China. We saw the microchip manufacturing company in China. Is it semiconductor manufacturing company?
Yes.
SMC. That partnered with Huawei to develop a 6 nanometer microchip they are using in the latest Huawei devices. So with the ongoing conflict, that is the trade war between China and the US, we saw US banning Nvidia from selling its products in China. So while China has been accessing Nvidia's chips through the black market at a much higher cost, we also know that they are building their own capacity. They have the technology now. So the next challenge they are facing is how to scale it up and produce as much as they can. So that's a real challenge because China is heavily invested in being self-reliant in terms of semiconductors. So that's the one thing I would be concerned about. Number two would be TSMC, which is a major supplier of components to Nvidia. So if there is any form of instability in Taiwan, that could cause massive losses for Nvidia. So those two components are key. And the third one is AMD. AMD is the only closest company that is about as close as getting its chips to perform at the same level as Nvidia's. So from the recent address in their earnings release, they basically said that there's a good chance that by the next 1 year, they will have progressed so much to produce a chip that performs at the same rate as Nvidia's chip.
Excellent. Now that you have covered all the bases, Jim Cramer has said Nvidia is not at its peak.
It's not?
At its peak.
Definitely. The company is
so it means it will go down. You know what inverse Cramer means?
Yes.
Yeah. So is that now a real risk? Because every time he has done it, I mean, he's a good stock picker. But unfortunately, every time he says something confidently, it's like the market says it's like the Main Street Wall Street bet. Not red. The Reddit Wall Street bet. He's like the Main Street guy on the other side.
WSB.
Yes. Do you think maybe some of the... Personally, I think they are valid. I would be worried about it. But I would not mind getting a buy at a lower price.
So the thing is, if you are Warren Buffett, you will be patient enough. I don't know if he still have some patience in him, considering the age. But I would be patient, wait for the price to really take... come on, be honest. Warren Buffett is not going to wait for a stock to pull back in the next 2 years so that he can buy. He's really getting old.
Yeah.
And considering he just lost his partner, and then you understand.
Yeah.
So what I'm trying to say is that if you are investing or your investing style mirrors Warren Buffett, you wouldn't be short Nvidia because you'll burn your fingers. You know it's a quality company. It has a history of beating earnings. But then you'd wait until price pulls back, which it always does, and then squeeze in a position at a much lower price. But then, if you are a trader and you're trading Nvidia shares today,
as a CFD, perhaps,
as a CFD or even fully paid up share, if the price has been going up and you didn't get an opportunity to buy when prices were low, then it's not the absolute best time to buy when the stock is at an all-time high. So you are interested in either going for a short position or waiting for the pullback and then continue trading the rally.
Okay.
So what we are seeing is that as the price or valuation of the company goes higher and higher, then the opportunity or the probability of making money from a bullish position gets smaller and smaller.
Okay. So basically what you're saying is that it is almost 99%, not let's say 90% full to the brim.
Yes, that's the point. It's 90% full, due for a correction.
Yeah.
We just don't know when the correction will happen.
Okay. Yeah. Interesting. I think then we'll have to, for me, I think when we'll see it is when the realization of the commercialization or not of AI will come. Do you think there will be maybe another company that will come that people will talk about it, like that meme whereby somebody enters the pool and then that is the darling of the show? Do you think there is any other besides AMD? Because truth be told, AI has dominated so much talk that if you just say you are working on some AI tool, your stock, or even in the earnings call, your stock gets a 3% boost up. Even if you have beat it, or even if you have done worse performance revenue-wise, they just say we are developing some AI tools and we think it will add value to our customers and it will make our systems efficient and productivity. Boom, 4% hike post-market or on market open. Do you think there is some company or some sector within the stock market or even in the world in general that in this year we should be looking at to say, okay, it has the moat, it has a good governance, but definitely it has a good growth potential. Nvidia right now, is it a value stock or a growth stock?
It's a growth stock.
It's a growth stock. Do we have like another candidate emerging right now?
Well, we have quite a number.
From the Magnificent Seven, of course, because I don't think we can have one from outside unless something major happens.
Well, from the Magnificent Seven, I think a likely candidate would be a company like Netflix. And this really depends on the technicals of the company and how they utilize AI in film production and distribution. That would reasonably reduce their input costs, because one of the key things that have really held back Nvidia is having a very big film budget, which eats into their sales. But then if they're able to incorporate AI into their film production and distribution, then they could cut costs significantly and potentially have big earnings coming without the big expenditures.
Interesting. Now, we have seen, of course, we have election coming up as well. I know it is far away, but definitely, like you said, these guys are quite old. They're not young people. And we don't know how, if they'll make it there or due to laws or some political issues, they might be set aside. Given the way Magnificent Seven and definitely wet, there has been rumors, I don't know if they are true, that maybe, I was listening today, some Bloomberg article saying there are some options traders who are pricing in a 25% basis hike given the sticky inflation by the Fed.
25% or 25 basis points?
25 basis points. 0.25%. 0.25%. To avoid confusion, 0.25% hike in interest rate anytime soon. Maybe even in March if the inflation remains sticky. Plus the political scenario.
Yeah.
Do you think that has the potential to pull away that, right now if you trade on Nasdaq, you are better off just looking at what is happening in Nasdaq, at Nvidia.
Yeah.
Are they doing a 7% price hike? Oh, yes. You definitely will get a 2% hike in Nasdaq.
Yeah.
That is how impactful and vital it is to its pricing. Do you think it will reach at some point whereby there will be correlation, yes, but at least it will be balanced across board, a steady growth or a steady price action with fundamentals of the general economy, just that one company?
Well, I think we are living in abnormal times. Nobody ever thought that the US would literally print $7 trillion. And it just happened. Then this amount of money that was printed during COVID then led to one of the fastest increase in inflation in the US. So peaking at 9.1%, then the Fed turned on the interest rates, so pushed them within a record of about 18 months, from 0.1% to 5.5%.
Yeah.
But then, even though inflation has been going down, it has reasonably refused to go below 3%. So in the last reading, it was at 3.1%. It was the 34th consecutive month that inflation remained above 3%. And this basically screams of another term we call stagflation, where inflation remains sticky for a long period of time. So in such a scenario, the Fed may have to change tactics and be more aggressive with rate hikes if it really wants to get the inflation back to 2%. But then there's also this other side of the fiscal spending. The Biden's administration is doing a lot of deficit spending, and as a result, causing some rather unexpected form of quantitative easing into the system. So with this happening, it's confusing a lot of issues. So it's the first time in my entire trading career I'm seeing a very strong dollar being in correlation with a very strong stock market.
And also a very strong gold.
Yeah. And also if you look at yields, like the yields in US dollars have resumed. They are almost hitting the previous highs.
Yeah.
With I think the 1 month has a hit over 5.3%. So it's becoming quite beauty to watch.
It's interesting times to look at the markets. There is a lot of the normal correlation we are used to.
Yeah.
I think this is very important because I had somebody say last week that rather on Twitter, on X, that he tried to correlate between DXY and the other currency pairs, and they are literally moving the same direction.
Yeah.
Strong dollar, weak dollar.
Yeah.
And you're wondering, what is this happening,
Yeah.
Let's say you have Euro USD going up.
Yeah.
And also DXY going up. It does not make absolute sense at that.
Yeah.
But it is what it is at the moment.
Yeah.
And I don't know if it's February or it's just since December to now.
Yeah.
But I would be interested to know at least, given that today we are also getting the FOMC meeting.
Yeah.
I think today
minutes.
Minutes. I think they might give us also the dot plot to see what is their projection.
Yeah.
Hopefully that can shed a light on the markets and give us some volatility at least to wrap up the month and also create some move away from the consolidation levels we have seen.
Yeah.
Yeah. Perhaps maybe we can wrap it up with the Kenya shilling at the moment.
Well, before we even check out the Kenya shilling, I have some content to add to this. So far there is quite a number of hedge funds in the US that have completely offloaded their stock positions. So you might want to check out companies such as D1 Capital. There is Discovery Capital, there is Suvreta Capital, Point State Capital, Soros Capital, Engine Number 1 Capital, Aristides Capital, and Oasis Management. So all these companies have basically offloaded their stock holdings between December last year and today. And it means that they are also projecting that the market may have hit a top.
Okay.
So there is a potential that the market will be going for a correction from this moment going onwards.
Okay.
So now coming back to the Kenya shilling, I think we had quite a conversation about it, especially the Eurobond and stuff. And I believe the panic is gone. The panic that was leading to the big sell-off from 163 down to different levels across different banks. We saw some forex traders going for 135, forex bureaus others going for 140. But what we are seeing is the shilling now stabilizing somewhere around 150.
Yeah.
So I believe the fundamentals haven't changed across board. So if there's still significantly high demand for the dollar, that demand is eventually going to wipe out the supply of dollars in the system, and we are going to resume the previous weakening trend until we fix our economy or fix the factors that are influencing the demand for the dollar.
I just hope nobody went, full margin to sell their dollars, because the spreads were crazy.
Yes,
absolutely out of this world.
Yeah.
And I hope I prefer the stability we have now.
Yeah.
I think the spreads are narrowing down, I think, to around 3 shillings, buying or selling. So hopefully it can remain like that.
Yeah.
For some of the news we have just shared, you can check on your portal under the section of analysis, especially on the news on the sales by Bezos, and some of the summary of the minutes that will be released later on today, on Wednesday, on 21st. But obviously, I think going forward, you can always be checking on that section for your own education. Other than that, any closing remarks, at least for this week, Rufus?
Well, I would say one of the lessons we have learned from the panic selling of the dollars is you learn to hodl. So when there's panic in the market, just stay put. Don't be weak hands. Just have a bigger time frame.
Enjoy the carnage.
Yeah, just go outside, touch grass, then wait for the markets to recover.
Definitely. Hope you've enjoyed that. Remember, should you be interested in getting active with FXPesa, just click on the link below, get yourself a demo account. For more of the same, you can always check FXPesa on YouTube, Bullish Banter on Twitter, and all other social media. I've been your host, Jesse. Good day ahead.
Adios.